Right, hello, welcome back to another video. Yes, I am alive. I know I've missed the last couple of portfolio updates for September and October. This video is going to be covering September and October. I know it was a couple of months ago now, but I'm going to go back and get back up to date on that, get back on track. The reason I missed them in the first place is we were in Australia? No, not Australia. In the US for just over 3 weeks. It was very nice, very enjoyable, big road trip. Lots of adventures, and it was really, really fun. But it did mean that I didn't get my video out. And then when I got back, the end of October seemed to come and go, and I didn't get the video out. Not really any excuse on that one. So yeah, this is going to cover September, October, and then I'm going to do another video that's going to be back on track, which is for November. So apologies in advance if this video has a lot of mistakes and ums and ahs and stuttering and things. One of the things that was holding me back from making videos as often as I wanted to was just the faff of getting microphones and cameras and editing software and all that kind of going. And I'm not a very technical person, so it took too long, and it was just a barrier to entry. So what I'm doing now is I'm just recording on my phone. I've got a little circular light here, which is far easier to set up. And then I'm gonna, hopefully this works, I'm gonna do screen record on my computer at the same time as recording on my phone. And hopefully, we'll see how this works, I can just tie them together so that me talking lines up with what is on the screen. And if this works, it's just a far easier way of doing it. So apologies if the audio is a bit worse quality. And I don't know if the camera's going to be worse quality. The camera's probably better quality, to be fair. But for most of the video, I should just be in the corner if I can make it work, and you'll be seeing my screen. But I'm not going to be going through and editing, so you may not have noticed. But in previous videos, I would go through and edit out wherever I made mistakes or stumblings or ums and ahs and that type of thing, as I just did then. So there's going to be a few of them. So apologies in advance. Right, I'll get onto screen share and we'll get going. Right then, now I should be off to the side, and hopefully I've managed to figure it out so that you can see my screen. Okay, so let's dive in. So this is covering all the way back to September through to the end of October, so 2 months, the 2 months that I missed my uploads for. Unfortunately, I didn't take screenshots of the end of September, so this is from the end of October looking back 2 months on this one. So for that 2 month period, I don't know about everyone else, but I found it a bit of a struggle. There was a lot going on in the world. There was the budget coming up in the UK. There was the US election coming up in the US, and the markets, for me at least, just seemed quite difficult. I had quite a few breakout trades that just didn't work and fell through. So I'm quite happy, to be fair, at the end of that 2 month period to be up 1% over the 2 months, which compared to the FTSE All-Share, which is what I use as my benchmark, and that was down just over 3%, as you can see here. So overall, I'm pretty happy with that. It's an outperformance against my benchmark. I haven't got it on here, but I'm pretty sure it's nowhere near as good as what the S&P was doing. But at the moment, I'm using the FTSE All-Share as my benchmark because I'm quite heavily invested in UK stocks. So if we move on to the next one, this is the performance just for October. So all the slides now are just October, plus 0.43% for October. So yeah, makes up the 1%. And then this is year to date. So I'm happy to say now, so I'm recording this at the start of December, so my November update will be coming after this video. It's a lot better than this. But at the end of October, start of November, I was sitting at just under 7% return for the year, which I wasn't happy with at the time. I was up above 12% back in July, took a big tumble and then kind of been going sideways, and I was okay, I was like fine, but I was getting a little bit frustrated at this time with all the effort I was putting in and the work and the long hours and things for no reward. So at this time, even though I was beating the FTSE All-Share at 4.7%, I was not happy with just under 7%. and I knew that I could be doing better. I was making mistakes, which I'm going to be, I'm learning, but I was making some mistakes, and I was getting a bit frustrated that I wasn't doing better than this. So that's year to date. This is all time since the inception of this public portfolio. So this goes back to the beginning of 2022, and we are now at just over 20% compared to the FTSE All Share of 5%, 5.3%. So we are destroying the benchmark that I'm measuring myself against. Part of me does think, I mean, because the UK's performed so poorly, should I really be measuring myself against the FTSE All Share? It seems a bit of a slam dunk. It's a bit easy to beat. Maybe I should be trying to beat the S&P, because let's be realistic, I could just buy an S&P 500 tracker, and that's up like something ridiculous this year. I know it doesn't do it every year, but it's up ridiculous, like 40% or something this year. So compared to that, I'm not beating it. But for now, I'm using the FTSE All Share because I do invest in UK stocks as well. And then this was the portfolio at the end of October. So this has changed slightly now, so I'm not going to linger on this too long. If you want to catch up on the November video that I put out next, then that will be an up-to-date snapshot of my portfolio. But the main reason for this video going back to catch up is just so that there's continuous timeline, and what I will jump onto now is the buys and sells, the trades I did in that month, what was successful, what was not. And I will try and run through this fairly quickly, because I don't want it to take a million hours, because I've got another video to get on to record straight away afterwards. So without further ado, let's go on to that. Right, so I'll start with the buys, and I will run through in chronological order. If I'm out of them now, I'll also include that at the same time. So the first one, this was back in September, 12th of September, Deliveroo. It was, you can see if I zoom out slightly, it was pushing, there was a resistance level at this point, it hit it here, it came back, it tried, it failed, it broke through here. Really, I should have been getting in around here if I was going to take the trade. I missed it, it came back down, and then as it broke up, it broke past its previous high on some above average volume. So I thought I'll take that opportunity to get in, and it just turned around and failed. This dotted line here, not quite sure, I think it's because it's an alert. That's why it's dashed, it's not normally dashed. But anyway, it came through on this day, it broke through, and I sold out. And at this stage, this was while I was away, so all of my, I set all of my UK stocks to automatic stop losses through AJ Bell when I was away. So I just got stopped out of that automatically. Unfortunately, unless someone knows different, you can't set automatic stop losses for US stocks on AJ Bell. I'm not 100% sure why. I'm sure there's some technical reason, but that's a little bit frustrating because it would be quite nice to just have them across the board. But so out of that one was a 10.7% loss, which is a little bit more. My target is no more than 10%, but I inevitably go over that slightly sometimes, because it's just the way it goes, isn't it? Right, so this is Insulet Corporation. This is a US healthcare stock. They do the insulin measuring, well, not measuring device, actually the devices that you can put on your arm or your back, and I think to actually administer insulin into your body, which is very useful. Obviously, it's for fighting diabetes, and it's all automated. So you pair that with a sensor that companies like Dexcom and things produce, and it's all automated. So whenever your body is in need of insulin, this device will automatically administer it, and you don't need to worry about injections and all of that kind of stuff. It's just a little thing that does it in a kind of very pain-free way. So it's a company that I like what they're trying to achieve, and it also has the financials to match. This one, good entry. We're still in it. A similar setup to Deliveroo, just this one has worked. It came up here, got rejected, came all the way down, was down here for a very long time, came back up, and it came through here. Not on amazing volume, but on reasonable volume. You can see the volume down here, and the white line is the average for the previous 50 days. I'll punch in a bit more so you can see a bit more clearly. Yeah, so it's only just above average, but on the day I bought, I was waiting for more volume to come in. There was a volume spike on this day, so I decided to enter there. Went sideways for a while, and then it has started to take off. So we are doing quite well on this one at the moment. We are up just over 17% and happy to keep holding. So some of these I have annotated. So LH is just for me to, when I'm looking back, I know what's going on. It means long hold. So I have two strategies in my trading. I have a long hold and a short hold. Entry strategy, entry system is exactly the same for both. The stock has to pass my checklist. It has to be breaking through resistance, all exactly the same. But a long hold, I will hold obviously for longer, but I will use different selling rules. So on a long hold, I will sell a third when it breaks the 50 day moving average. I'll sell another third when it breaks the 150 day moving average, and I will use a trailing stop on the 150 to sell the remaining third. Obviously, it's actually got to get moving for most of those to come into place. If it comes down and hits my stop, then I'm out of it straight away. But if it starts motoring up, those are the rules that I would use. And on a short-term hold, I will take a third at 10%, a third at 20%, and then the remaining third once it breaks the 50 day. So I'm just out of the stock sooner. And my criteria for whether I take a long hold, a long-term or a short-term trade is what stage it's in its phases. So you've got the phase 1 is the base, phase 2 is the uptrend, phase 1, phase 2, phase 3, and phase 4. So this is the share price going up and down. So if it's in phase 1 and it's breaking out, then I'll take a long-term trade. If it's already in an uptrend, phase 2, then I will take a short-term trade. So I'll show some examples of that as we go through. I'll delete them later. Moving on, Duolingo. Right, here we are. So again, a nice long base. It's basically, so I decided to do this as a long-term hold because you can see back here is the IPO, and this was the high of the IPO, and it hasn't really got above there. So I'm considering this whole section here as its IPO base, and this as the breakout of its IPO base. So I'm considering all of this as a phase 1 base. So hence I've held it for a long hold. So Duolingo, for those that don't know, they're the company that's for learning new languages, and they have an app that is, I don't know if it's the most popular language app in the world, I think it is. But yeah, it's an app, and it will teach you new languages effectively. And there's a bit more to it than that, but that is effectively what the product that they provide. And they're also branching out into teaching mathematics and music. So they've got a couple of other avenues they can go down for growth there, but they've still got huge scope for growth in languages, and they've only just, well, not probably for a year or so, but they didn't used to have English on there because most people were English customers looking to learn foreign languages, but now they've got quite comprehensive English on there. They said that one of the things that they didn't have was intermediate and advanced English classes. So now they have those, and it's actually providing a big growth spurt for countries such as India, where a lot of them speak some English, but they want to learn advanced English and refine their English, and their courses are proving very popular in there. They're also integrating AI to a heavy extent, so you can have conversations with a chatbot on the app, and all that kind of thing. So it's a company I really like. The entry worked really well, as you can see at the bottom again, down here. Where are we? A little volume spike here as it broke through the resistance, and again we're still running on this one. It's a long hold. I won't sell any until it breaks the 50-day moving average, and I'll sell a third of my position there. But so far we're up 41%, so this one is doing really, really well. Volution, this is one that didn't go so well. This one, in hindsight, was just a mistake. So this is a UK stock, and they do ventilation, like HVAC equipment, so air conditioning units, fans, that type of thing, in UK, Australia, and some other countries, maybe US. I'm not 100% sure. But on this day, I can't remember what the news was. I think it might have been an acquisition. I think it was an acquisition that's really going to boost revenue in the Australian region. And I shouldn't have entered here, basically. So the acquisition came through, it was very positive, there's a huge volume spike, and I just got excited basically. It's a stock I've been watching, but it doesn't, you can see yellow here means it's 30 to 35 on my checklist, it doesn't actually pass the checklist. I got excited and I thought, oh, it's going to run and run and run, so I entered for a short-term trade. So when these green lines are here, that's 10% and 20% my profit targets. So I entered right at the top, poor timing, and it's just fallen back, and I had a stop below the breakout and I got stopped out, as simple as that. But I should not have been entering this. There was no base here, really. It was just it was kind of overextended as it was. It had been running up. It was not a good entry. I should not have taken the trade, but lesson learnt. We got stopped out, so that was an 11.4% loss. So those are the kind of mistakes that I need to not repeat. I mean, that was a 11% loss on a 5% position, so over a 0.5% hit to the portfolio, which would have improved my results for those 2 months just by eliminating silly mistakes. Elixir International is another failed one. This one was quite frustrating, UK stock. So I had in here, there's a long base coming along here, as you can see. I didn't get in here, I think there wasn't any volume back here. Yeah, it's hard to tell because of this huge volume spike. Makes it almost impossible to see what was going on here. But I don't think there was enough volume when it broke through here. So I put another level in at the peak, waited for it to break through that, and from memory, again, you can't really see, but I think there was volume here, and I entered on that breakout. It started off well, and then it just fell back down. I can't remember, this might have been running up to the budget or something, I'm not sure why it started falling back, but I just got stopped out, it didn't work. And then as soon as I got stopped out, basically to the penny, it turned round and ran up, and I would have been about 15% profit now. But that's just one of those. I don't think I did anything particularly wrong here. Maybe I could have got out on this day rather than waiting for another few percent. But I did, in my mind, I say I knew, obviously I didn't know, but the reason I didn't sell here at the end of the day is I was very confident that it was a shakeout and that the price was going to reverse. Then the next day it was down another few percent, and I just sold because I didn't, in case I was wrong, and it carried on tumbling, and I turned an 11% loss into a 15, 20, 30% loss. So I got out, but then the next day obviously it was a shakeout and I was proved right. But I stuck to my rules, arguably should have sold sooner, but that was an L. Carnival, this is a funny one. So another one of the reasons that I've taken a bit of a break from YouTube is I was absorbing information from everywhere. That's what I'm doing at the moment, watching different videos, reading different books, following different people on Twitter, and I'm a bit like a sponge. I'll see a strategy I like, I'll try it, whether it be investing, value investing, or trading, or momentum trading, different strategies, and I keep jumping around. I'm going to make another separate video after the November update with my new plan going forward for 2025. This portfolio is going to stay exactly the same, but I have additional things that I'm going to incorporate separate to it, which I'll get into another video. But this was just a completely different strategy. Same entry and everything, same breakout momentum trading, using kind of the Stan Weinstein principle of phases and things, but it didn't pass my checklist. It was nowhere near on checklist score. I went through about a week period of just running a screen for momentum, basically, through TradingView. And this came up on the screen, so I had it on my watch list, it broke out, and I bought it with the intention of holding it. And you can see this is where I bought it, and this is where I sold it. And if I'd held on, it would have done really, really well. That's probably about 30% by now. Yeah, 33%. The reason I sold is I sold, I think it was the day before the budget. Most of my portfolio, 95% of my portfolio, I just had conviction and I held through the budget, and it turned out to be fine. But there was a lot of chatter that the budget was going to cause like a market sell-off and everything was going to crash. So I did just especially positions like this where I didn't have any conviction on it at all really, it was just a technical trade, I decided to just sell, just de-risk myself somewhat and take a little bit of risk off the board, even if it was just a couple of stocks. So I sold here, I banked myself a 5% profit. So a successful trade, technically. But if I had just had the conviction with it, which I couldn't have because I didn't really know about the stock, so it's hard to have conviction when you haven't done any research. But if I had, I would have had a 33% profit by now. But there you go. Next one up, Uber. This was a mistake as well. So, I mean, technically not too much of a mistake, but it didn't pass my checklist. So that's the mistake. Through all of November now, so you can see some of these have changed. So they may have been green when I bought them. So green means it passed my checklist. Yellow means it's close to passing my checklist, and red means it does not pass my checklist. But Uber didn't at the time. It was kind of a 34 or 32 out of 36, so it didn't pass the checklist. One of the things I've started doing in November, which has proved to work well, is I categorically cannot buy a stock unless it passes my checklist. No wiggle room, no if there's a perfect setup, I might buy it. No, it's got to pass the checklist. But anyway, it broke out. This was on the news that, I think it was Tesla, said that they were going to be, on the Tesla earnings call, Elon Musk was talking about how Uber would be a great beneficiary of their self-drive automation technology. He was talking about his robo-taxis. I think it was after the Tesla event when they showed the robo-taxis driving around their kind of mock-up town, that Uber would be a big beneficiary and Uber would be the kind of company that might manage these robo-taxis. So Uber shot up on that, and I thought, I waited for the pullback. I was like, it's going to pull back to this line and then it's going to carry on up. It didn't. I bought in, waited for the continuation, and it just fell back. I had my stop here. You can see this was a bit of a disaster. I had my stop here. It came down, started going up, and I was like, oh, okay, the shakeout is complete. It's going to continue. And then it gapped down on this day on earnings. From memory, I did do a snapshot on it. I don't think earnings were actually that bad, but just not good enough for market expectations. It gapped down. So it gapped through my stop, which was quite annoying. And then I was like, well, I'll give it a bit of time because I'm already down. And then on this day, it started to kind of drop again. It dropped below the 150. You can see this wick coming down. I was just like, no, we're taking too much risk here. We're getting silly. Let's just get out and take our loss. So we did end up taking 13.9% loss on that one. I think there's two mistakes. One, buying a stock that didn't pass my checklist, which was actually the case with Deliveroo as well, and Volution. So 3 losses which could have been avoided by not buying them in the first place. And the second mistake, even though I think I got out for about the same price, was not selling on this day. I should have just sold, even if it had shot straight back up, which I'll get onto later on. A very frustrating trade where I did nothing wrong there. But anyway, that one was a loss. Texas Roadhouse, so a US restaurant chain. This one's going well. It was in a sideways action here. This was in a phase 2 already. So you can see it's been in an uptrend for a while. So we took a short-term trade on this. So I'm just targeting 10%, 20%, and then get out when it breaks the 50-day moving average. It broke out here. There actually wasn't that much volume, but it was such a textbook kind of rest on the break on the way up to phase 2 to then continue that I just decided to enter anyway. And so far, I took some profits, a third off the table when it broke through the 10% range. So we've got some profits banked. This should be moved. I'll move this up now. Once I bank profits at 10%, I move the stop to break even. So theoretically, unless it gaps all the way down and through, I shouldn't be able to lose money on this trade now. If it comes down and hits here, I sell, and then it's not going to be much, but it'll be like 4% profit. But now hopefully this just continues higher and we'll move up, take 20%. If it hits the 50-day, we sell everything. So that one's going well at the moment. Exelixis is it's a hard name to pronounce, but this is another US healthcare stock. So we had a double entry on this one, which is a bit unusual. But this was a bit of time when I wasn't feeling 100% confident, so I reined back my entry sizes. So instead of entering for 5% of the portfolio, I was entering for kind of like 2.5%, 3%. So I entered here, timed this really well, if I do say so myself. They put out good earnings the day before. I did my earnings snapshot on it. I was very confident that the stock was going to go up the next day. So I entered at the open and got a reasonably good entry, and then for the rest of the day it continued higher. So I was very happy with that. And they had this line here is from previous resistance a long time ago. So because this was only a half position, I decided, so I put this sign in, this annotation in on the day that I entered. I decided that I was going to complete my position, so buy the other 2.5% when it broke through this next resistant line, which it did here. So I topped up to a full position. This is a long hold, so we're not going to sell anything until it breaks the 50-day. It did break the 50-day here. I'm not sure why I didn't sell. I should have sold a third of my position there, but I didn't. I just held on. So I'm already not following my rules, but I think it's because it hadn't gone far enough in my mind, and I was just like, I'll hold on. Anyway, I shouldn't have done that. But in hindsight, it's worked out quite well. We've had a good run. It gapped up on this day. We're now up a reasonable amount on this position. Another one that's going quite well, PayPoint, a UK stock that does where you can top up your gas and electric in shops and stuff, and they do business to business payments and lots of that type of thing, lots of other things as well. I did have a bit of a research on the company on the day that I entered. I can't remember a lot of the stuff off the top of my head now, but I've got lots of notes on it. But again, classic. I mean, I could have entered down here. This would have been the ideal entry. It's come down phase 4, set up a phase 1 base, and it's broke out here on, if I zoom in, you can see down here, a huge volume spike, actually. So I've got a light in the way of my screen, so I can't actually see the top corner. So on the day it broke out, it was 387,000 volume compared to the average of 103. So 3.5 times plus the usual volume. So that would have been the perfect entry. I didn't take that. What date was it? No, I don't know why I didn't take that. But then there was another entry opportunity when it broke through this previous high, which I took, which wasn't as good an entry opportunity, but it's worked out okay so far, and we are up just over 10% on that one. I have put this as a long-term hold. You could argue that this is a phase 2 uptrend now and it should be a short-term hold, but there's also an argument to make that this whole section here, let me just mark it out. This whole section here is the phase 1 base, and it's just broken out there. So I've taken that option. The next headroom is all the way up here, which is a good 50% away. So if it goes well and it makes it up to this overhead resistance, I will take some profits off the table there. But I'm treating it as a long-term trade. We've got 3 more buys, and then I'll get onto the sales. Next one is Trustpilot, another UK stock. So they do it's the reviewing website. So you can leave reviews for, well, any companies, I think. They've been doing very well financially. This is a short-term trade because it has been in quite a long, very powerful phase 2 uptrend. Just the classic taking a breather on the way up of the phase 2. Sideways action from March to October, so a good, what's that, 6 months? 6 months sideways action. It broke out, I bought on the breakout, and ever since then it's been in a very strong uptrend. I have taken 2 sets of profits, so I think the line is still there. No, I deleted it. So this red circle here was the 10% level, and the next red circle is the 20%. So I've taken my 10% for a third of the position and my 20% for a third of the position. I've moved my stop up to because we're still above the 50-day, I've moved it up to the 10% level. So worst case scenario now, this comes down and I sell my final third for 10% and we'll average about 13%. I've got a tickly cough from a tickly throat from talking for so long. But hopefully this continues up and we will use the 50-day once it's above this stop loss here. We will use the 50-day as our stop. So we'll see how that one goes. This is the most frustrating trade I have had for this 2-month period, or maybe for the year. Incredibly frustrating trade. SoFi, a big US fintech company, it's a challenger bank. They have ambition of taking on the big banks eventually. It's a really popular stock being talked about on Twitter, on X and things. It's kind of in the zeitgeist at the moment. Sorry. Perfect phase 1 base. Perfect breakout of the phase 1 base. I entered, got whipsawed out. I sold once it went through my stop loss, and then it soared for the next kind of several weeks, and I would have been up 45%. Just one of those. I had this as where my stop loss was. It was quite tight. Well, it wasn't even that tight. It was 8.7%. And I tend to make my stops less than 10% with US because with AJ Bell there's FX fees. So I normally have around, for a 5% position, around 40 to 50 pound of fees for my buy and for my sell. So to have a 10% loss, I need to have a bit of a cushion. But you can see on the day, if we punch in, so I bought here, it shot down. I sold once it went through there, and then basically as soon as I sold, it just went straight back up. A classic shakeout. It's the type of ones that it's the type of shakeout that I was talking about earlier with other stocks where I've held on for the shakeout and it hasn't come. This one I decided not to hold on for the shakeout because of those previous trades, and I shouldn't be holding out for the shakeout. I did the right thing. This, theoretically, in terms of following my rules, this was a successful trade. I did exactly what I should do, but it just was a classic shakeout, straight back up and continued to soar. Really, if I'd had the conviction, I could have got back in, but there wasn't much volume until here, and then it's already quite extended. It just wasn't a very nice setup after that. So that I was out of that. It was an 11.6% loss in the end. So not a fun one, and it's not nice to see a stock you've just entered and sold 3 days later, then run on and put in a 40-50% gain. But that's part of it, isn't it? And then the final buy for this period is Trainline, UK stock that does the train ticket apps. So my wife and I tested it. We went to London last month and we bought our train tickets through Trainline. It's all very straightforward. I guess the benefit of it is you don't have to go to individual train operators like Great Western or National Rail or anything. You can just go to Trainline and it will give you the prices for all of them and show you the best routes, and theoretically it should give you the best price. But it's fine, we just pay for tickets, you get a QR code, you scan it and you're away. So I think a good product. They operate throughout Europe as well, and they're doing reasonably well. I bought out, so I could have waited for this upper level, but there was a very defined trading range along here, along the bottom. So I bought on the breakout of here. It climbed up and it's broken through the upper level as well. Took a breather there, and just today actually, what are we up? 2.5% today on the 4th of December. So it's just starting to break out of there as well. So it's looking very promising. So this is a successful one, and we are up just over 20% so far on that one. So in terms of stats for September, October, my entries, so that was 13 entries that I just ran through. Of those, 8 are pretty much unless there's a huge gap down, they're pretty much guaranteed wins, and the remaining 5 are losses I'm stopped out of. So that's a 61.5% win rate. Hopefully, of those 8 wins, most of them will go on to be a lot more than 10%. So as a selection of 13 trades, I think it's quite a successful bunch, especially considering that was through September and October, which was quite for me anyway, quite a tricky time for trading. There was a lot of whipsawing, a lot of uncertainty, not a lot of confidence in the markets, or certainly in the UK anyway. So I'm quite happy with that, and as I say, a lot of them are continuing to run, so we'll see how they go. Sells, I've been through most of them, but these are some sells from stocks that I bought before that period. So Keystone Law has been in the portfolio for ages. It hasn't passed the checklist in ages, but because it was going up, I just continued to hold. You can see here, I bought back here and back here. The green line is my average entry price. So it's going really well. It started going sideways. I was getting a bit cautious here. So this was before my rules of selling anything when it crossed the 50 or anything. This was back in June. But I did decide to take some profit here. So each of these red circles is a sell of a third of my position. When it broke the 150, I sold another third. I think this is when I came up with my new rules. And then this was the trailing stop. So the low point here, as it started rising again, I rose my stop to the point on the 150 where that met. And I sold just above it because to me it was very obvious that this was just going to keep falling. So I didn't see the point in waiting for it to actually break through there. I sold before it hit. So completely out of Keystone Law now, which is fine. That's quite a successful trade. I could have got more up here, but I'm happy. It was a 31.5% profit. It doesn't pass my checklist, so at the moment there's no chance of a re-entry. It's off the radar for now. Gamma Communications we still hold. Does not pass the checklist, but it did when we entered. Basically it's just been, this is an absolute textbook Stan Weinstein's kind of phases of a stock's life cycle. It's literally as if, like the drawing I just drew earlier, if you were drawing this on a page, you'd like phase 4, phase 1, phase 2, phase 3. And it literally is almost as if someone's just drawn it on. Absolute textbook. It broke out here. I built some position back here in the phase 1 base before I had my momentum rules. This was back in value investing days. It broke out. And it's just been a perfect uptrend. I put this trend line in. This blue line here is the trend line I put in. It's broken this trend line, and I took a third off the table here. So we're still in the position. We still got 2/3 of the position. If it breaks the 150, I will take another third, and then I will take the final third on the break of the trailing stop. So that's going well so far. I haven't actually taken a note of what percentage. Ooh. No, go away. Of what percentage gain that was, but I can just have a little look. So 33%, so that's not too bad at all. Phonics Mobile, a frustrating one. More so down to me, really. So we entered here. We did have a little resistance line in there. It broke through there, we entered, it was going quite well, continued rising. I don't know where I got this line from, to be honest. No, there is no... I can only assume that I put this line just from this high here. It came back, and I put a resistance line on that, but that's not enough evidence to have a resistance line on. But anyway, it broke above that. I entered, I added to my position. It fell back. I continued holding because my stop was still the original stop, and it broke through, and I'm out. Just not a very clean trade. I don't like this really. Even this initial entry I don't really like. Just not a good trade. But I was stopped out. Unfortunately, it's a 15% loss just because I raised my average price by buying in here. So I'll try not to do that again. Celebris Technologies, another UK technology stock. This one's not too bad. There's this long resistance line in here. Bought on the breakout. It's just this period, a lot of UK stocks that I have been entering have failed during this period in the lead up to the budget. There just wasn't any, most people were taking money out of the market. There wasn't any momentum to move things forward. I didn't stop trading though, because even if I'm not going to make huge money, I did manage to make 8% over those 2 months, but it's all a learning period and I want to trade in difficult times as well as good times. So, but it was difficult. This just, I think in a big bull market, this would have just carried on, but it's gone sideways. I had my stop quite tight. I didn't sell here because it came straight back up, but down here at the end of the day, it was still down there, so I sold, and it's gone back up. It hasn't really gone anywhere. Palantir Technologies. So we had a lot of activity in this one. So we've had 2 separate buys. So this was all the way back in August. We bought on this breakout where I think half the world bought it. Long term, spent a lot of time down here. Obviously there was entries down here, but it was not passing my checklist down here at all. It wasn't even really on my radar down here. It wasn't really until here that the world started talking about Palantir. But yeah, long-term breakout. I bought here, really good entry. As soon as I bought there, it kind of skyrocketed. As I say, I think half the world bought here as well. So I bought this as a short-term trade. So this was a 10% sale, but it went up so quick. This was about a 15% sale, and then this was 20, which is why these 2 dots are so close together. But the final third of that entry I'm still holding because it hasn't come close to the 50-day moving average yet. When there was this little break here, I did have a little line in here, and I said to myself, because Palantir was such a hot stock, if Palantir has good results, I will buy in again. I'll have an extra position. And I should mention actually that both of these positions were quite small. This was back in the days I mentioned earlier that I had a period of not putting full positions on. This was one of them. I think I only went for a 2% position. Unfortunately, it's one of the best trades of the year for me in terms of percentage, and I only went for a small position. And because I already had a position on, I only went for another 2% position here. But yeah, it was after earnings. It shot up. I don't know why I didn't buy on this day. That's a mystery. I bought the next day and it's been going well since. This was the 10% and this was the 20%, and we're still holding the final third of this position as well. So if you count it as one overall position, we have a third remaining and we will sell it. I'll either sell it when it hits the 50-day, or if it has a blow off top, if it goes up kind of 20% in one day or something, I may just try and sell at the top and take that profit and bank it. But that's going very well, happy with that. AstraZeneca. This is another one I shouldn't have been in. It didn't pass my checklist. I think it was only a 30 out of 50. It needs to be a 36 to pass. Did not pass the checklist. But I was just looking for trades basically. So I entered here back in August, which should have been in my August video, and it just failed. It's as simple as that. My stop was here. I sold under once it broke through the stop. It's as simple as that. A 7.2% loss, so kept the loss quite small, but not much more to say on that. Journeo, we eked out an incredibly small profit on this one. And this is the benefit of doing the short-term trade strategy rather than the long-term. So this has been in a long uptrend. I just counted this as one break in the stage 2 uptrend, thinking it was going to continue. You can see this was the high. I entered here. It went up. I banked 10% profit. It came back down to break even. I sold at break even. So I ended up getting 2% profit. I mean, theoretically that should be 3, shouldn't it? But I think I sold just below my buy-in, and then fees and things, it works out to only 2%, but it's a profit. and then it's been going sideways since. It's still on my watch list, so I'm just waiting for it. I will re-enter if it breaks through this overhead on volume. And then the final sale, so we're almost there. Bear in mind this is covering 2 months, this is why this is quite long. So hopefully, if anyone's still here, drop a comment, drop a like. Thank you for staying around for this long. Yeah, I appreciate it. FRP, this is another one. I don't think I did anything particularly wrong. There was 2 points where it tried to get through this level, got rejected, so quite a strong overhead resistance level. It broke through, I entered, it fell back, and I sold. Yeah, there's not much more to it than that. This is just that period where UK stocks didn't have much strength to them, and I am out. But again, it's still on the watch list. But I think I'm going to wait for it to break through the all-time high. I think that's the all-time high. Yeah, because it should have more momentum, more power going through the all-time high than through this level where there is nearby resistance. So we'll just wait on that one. But there you go. Thank you for watching. As I say, if you are still here, I'll be straight away now. I'm going to go into filming the November update, and that'll be coming out. So please watch that as well if it interests you. There's quite a lot of good things going on in November. The portfolio's done really well through the month of November. And as I say, I can't remember if I said earlier or not, but I have another portfolio. So the public portfolio, this one is going to stay the same, not changing anything there. I'm setting up another portfolio, well I have set it up, which is a passive portfolio, which is using my checklist system. And the idea is that I buy 30 stocks, the top scoring stocks, and I just hold them for a year. I'm not allowed to touch them. And at the end of the year, I rebalance the portfolio. So if any have fallen out, if any aren't still in the top 30 of my checklist, I'll sell them, and I will rebalance it so it's even distribution across the 30. But I'm going to do a dedicated video on that. I'm quite excited about that. So yeah, stay tuned for that one as well. Anyway, thank you very much. I'm rambling. Hope you have a great day, and I will see you soon.